Hey guys, Lara Rockefeller with Mortgages Made Easy, powered by Premier Mortgage Center. And today, what I wanted to talk to you guys about was what the heck is going on with mortgage rates. I'm sure you guys have seen on the news, we'll always talk about mortgage rates rising. And yeah, my inbox has been really flooded lately with lenders starting to really raise rates, okay? Especially if we're comparing to this time last year. Now, I mean, what was going on this time last year is completely different in the world than what we are today. Last year, we were in the middle of a pandemic. And yes, there is still the pandemic going on, but obviously not the same as it was last year. And lenders and the government really lowered interest rates to a place that we have never ever seen before. They had never been that low. And I'm not sure if they ever will get that low again. I mean, I don't have a crystal ball, so it's really hard to say. But flash forward to a year later, and here we are. We're in a really volatile situation with what's going on in the world. So not only do we have a war going on in the Ukraine, it's really influencing a lot of things that are happening in Europe, and then it comes over here. We have a huge supply chain issue going on, and inflation. Inflation is getting very high, and it is expected to go a lot higher. Okay. So because of that, what's going on is that the government bond yields are starting to raise. That really influences fixed rates. The reason for this is that banks kind of set their fixed rates off what's going on with the bond yield. The reason for this is that banks know that they're not always going to get all of their mortgage money back, right? Some people will default. They don't always get 100% paid from that. Lenders, however, know that government bond yields are 100% due to be repaid, okay? So they kind of use those bond yields as a way to predict how much they're going to get paid and what their investments are going to be. So when bond yields start to go up, then you're always going to see fixed rates go up, and then in turn, the discount on variable rates also start to go up, okay? There's been a lot of talk about a recession coming. It's probably going to happen at some point next year. We really need to start buckling down over the next year and kind of just, if we can, rein in some of our spending, kind of take this moment to kind of evaluate where you're at, do a look at your budget, see if there's anything that can be trimmed. Let's take a look, and maybe if there's some subscriptions, that kind of thing. Let's take a look and see where we can kind of just, for each of our own families, kind of take a look, which is not a bad thing really, right? Like, it's always good to be doing a financial check-in and just making sure that, you guys are on the right track. Okay. So if you're in a variable rate, I definitely think it sounds like the Bank of Canada is going to do a few more increases over the next times that they are going to make their announcements. So the next announcement is, I believe, June 13th. I will just double check that to make sure. And if they do raise it again, that means that if you're in an adjustable rate variable mortgage, then there is going to be an increase to your payment. Things that you can do to start preparing for that ahead of time is, if you're able to, most lenders will allow you to up the amount that you're already paying. So maybe if you can do that, take a look and see if you can add an extra $100 on your mortgage payment every month. And that way, that kind of just insulates you for when they do raise rates, that you're already used to paying a little bit of a higher rate. That also is going to pay off your principal quicker too. Keep in mind that this is not going to be forever, okay? That what goes up comes down. Mortgages are all cyclical, okay? They're definitely, it might be probably at least a year that we're seeing. But if we do go into a recession, then lenders and the government, they start to overcorrect, and then that means that rates go down. So it's just kind of always ebbs and flows, okay? Remember why you chose a variable rate mortgage in the first place, right? There's a difference in the penalty. If you ever want to break that mortgage, it's a much lower penalty compared to a fixed rate. Another thing that you could be thinking about doing, if you are purchasing a house right now and you really don't want to go into a variable, is we could be looking at smaller terms. So mortgages, remember, are amortized over a long period of time, 25 or 30 years, and then broken down into smaller chunks of terms. And that's what you're negotiating for every time that you negotiate your mortgage. So instead of doing a 5-year term, which is the standard, we could be looking at doing a 2-year term or a 3-year or even a 1-year. Or if you're in a variable rate mortgage right now and you're really panicking, I don't want you to panic. Remember, like I said, we're going to ride this out. We're going to get through this year and we're going to see what happens next year. If you really can't stomach that idea, reach out to me and we can look at the idea of maybe locking your mortgage into a fixed rate, like maybe a 1-year term or a 2-year term. Okay, we can talk to the lender and see if that's a possibility for you and what that would look like payment wise. Keep in mind though that the spread between fixed and variable is still quite large. Okay, so you're still saving money and interest by being in that variable rate mortgage. It might not feel like it when you're getting notifications from your lender that your payments are going to go up a little bit. But remember, what goes up comes down, and it's all part of just being in that mortgage cycle. Okay. Reach out to me if you're feeling nervous or stressed or overwhelmed. I can look at your actual situation. We can run numbers and we can figure it out together. Okay. We're going to get through this. This war is not going to be forever. The supply chain issues are going to be fixed. We're going to figure out things together. One positive of all of this is that we are starting to see the housing markets cool off a little bit. We're probably going to see house prices come down a little bit. Maybe not in like GTA, maybe not in Toronto, but in small other areas we are. So that's good news for people that are trying to get into the market. We're not going to see, in my opinion anyway, this is all my opinion, but I don't think we're going to see a big housing market crash. But I do think we might start to see things cool off a little bit. And one other thing to keep in mind is that when you were being qualified for your mortgage, we were always qualifying you at a much higher rate. That's what the stress test is, okay? So we were looking at all of your financial information and we were not running your numbers at the mortgage rate that you ended up getting. We were running it at a much higher rate, okay? Excuse me. So, on paper, you should be able to just carry on. Yes, I know it does suck having your payments go up. But like I said, now is a good time to take a look at your budget. I can be more than happy to walk you through different budgeting apps, or I can help you with checklists or spreadsheets. Okay. Reach out. Don't start panicking yourself in your head. Really, let's reach out. Let's have a conversation and we'll figure it out together. Okay. All right. If you have any questions, you can send me a message and we'll figure it out. Okay. Have a good day and we'll get there. Okay. Bye guys.